Hello, everyone, and welcome to the San Jose, California real estate market rundown for February of 2023. As always, this is our opportunity to take a look at what's been happening in past months, what led us here in terms of real estate numbers, and where we are right now. And from all of that, hopefully finding some little tidbits of information that can help us stare into the crystal ball and figure out what might be happening in the real estate market in the coming months for San Jose. So let's go ahead and jump in and take a look. As we always do, we're going to start off with the San Jose active listings for February. And this is basically an inventory number. This is how many homes were available on the market for buyers to choose from, and it also represents the competition number for sellers. How many other homes out there in the world were there that you were competing with to try and get more visibility when compared to other homes? So we're going to take this from two different perspectives. One is the year-over-year change. As you can see from this chart, if you look at the two columns on the right, these two guys right here, one is from February of 2023 and the other is February of 2022. So we're getting a side-by-side comparison of the same month for this year and last year. And it's a great way to visually see what happens in the same time of the year, because we want to at first eliminate seasonal influences, right? Because as we all know, real estate performs differently at different times of the year for different reasons. Whether or not there's sunshine or rain or whatever else definitely impacts how real estate is performing at different times of the year, because we also have school, we have beginning of school, we have the ending of school. So this way we're kind of eliminating those seasonal influences to give us a slice of time. Now, what's interesting about this is how little change there really is between February of 2022 and February of 2023. And remember, this represents a comparison to a time where two very different dynamics were in play. Last year in February, interest rates were very low. This year in February, interest rates are very high. We didn't see interest rates go up in 2022 really until March. So it's interesting to see that we really only have 2.9% more homes on the market this year than we did last year. So keep that in mind as we go. We would have expected, given the kind of overall performance we've been seeing in the marketplace, we would have expected, I think, more inventory to be on hand. So we'll go ahead and continue on with these numbers, but keep in mind that there are other things in play here as well. The other thing is, as you might be able to notice here over to the right, we have the months of inventory number, which is at 1.5. That is very low. That is not a month of inventory that you would expect to see in a buyer's market. That's what you would expect in a seller's market. And the reason why I point that out, and the reason why I'm also pointing out these overall active listing numbers, is we are right straddling an edge here. One very small dynamic could change, and suddenly we're no longer in a buyer's market, but in a very strong seller's market. We're already in it from an inventory standpoint in terms of month of inventory in a world where we have very low inventory. 1.5, as I said, is very low. A balanced inventory is considered more around 4 months. 3.5 to 4.5 months worth of inventory is considered balanced. And then anything over 4.5 in my world, at least the way I see it, would represent a buyer's market. So clearly we have contradictory statistics here, because the actual market itself is showing a stronger buyer's market, but all of these other things are showing that we are right at the edge of being able to have a seller's market again. If interest rates were to suddenly drop, it could very easily tip things right back over into being a seller's market. Now, in terms of history, what can we see? It's a very easy trend to spot. We can see a steady ramp up from December of 2021 right up to July of 2022, where we peaked at 1,113 homes on the market, and then a steady decline from July of 2022 all the way to February of 2023. And I would expect, in terms of month-to-month change, to see the same relationship. In other words, as we sit here in February, I would expect to see, but the one thing that's interesting to note is between January and February of last year, we saw a very clear increase in inventory, but this year we saw a decrease, which shows some softness that obviously isn't reflected in the past year. But it wouldn't surprise me if between February and March, we do see an increase in overall inventory. March is very much the month where that tends to happen across communities, not just San Jose, not just Morgan Hill, not just Gilroy, but Santa Clara County in general. You tend to see it in Los Gatos, Cupertino, Palo Alto, wherever you are, you tend to see that number go up. So what will be interesting to note in March is not does it go up, but by how much does it go up? How much do we see active inventory go up in that particular month? All right, let's go ahead now and move on to the total number of new listings. This represents the number of home sellers who decided to put their home on the market in February of 2023. Now, this year we had 478 homes added to the market. That's compared to 790 homes added to the market in San Jose in February of 2022. So that's almost a 40% drop from the same time last year. So a substantially noticeable decrease in the number of folks who wanted to jump into the market and become sellers. I've mentioned this in some of the other market analysis I do. In some of the conversations I've had with people, the reasoning tends to be, well, where do I go from here? You know, I feel like I've sort of missed the boat and I'm going to wait for the next turnaround when markets are stronger. And there's a lot of folks who are just not feeling confident in trying to sell their home right now. I'm not getting any of the COVID reasons that we were getting a year ago, right? In terms of folks being hesitant to put their homes on the market. It all seems to be other things. And then obviously the headlines about high interest rates, all those other types of things, pushing buyers' tendency into lower price brackets obviously has an effect. So, and one thing that's important to note is if you are someone who is in a position where you may need to sell, get an evaluation on your property. Submarkets are still the very real thing, and San Jose is a gigantic area, and there are some areas where the market is extremely strong. Homes are selling quickly for over asking price, and if your home is located in one of those areas, it may make sense for you to do your profit taking now and move yourself into something else. Or particularly since inventory is high, and if you move into a slightly lower demand area, you could actually end up netting a pretty good savings for yourself. So in terms of what do we see historically between January, February, and March of last year, we see that from December to January, we saw an increase in the total number of new listings. We saw the same thing this year. From January to February last year, we saw an increase. But notice how much more subtle that increase was between January and February. January and February of last year, substantial jump from 592 to 790. This year, 440 to 478. So still an increase in terms of how it relates to the month before it, but a much softer increase than last year. So far fewer sellers wanting to jump in and participate in the market. And again, that is commonly what I'm seeing. And anecdotally, from the contacts I'm getting from people, I am seeing far more buyers right now than I have in quite some time. There are more buyers out there searching. I've got a pretty substantial number of serious buyers who are searching and actually consulting the results of their search on a regular basis, meaning at least twice or three times a week. So, but I'm not getting as many inquiries relating to sellers. Compared to the same time last year, I am getting, it's very close. I'm getting almost the same number of inquiries in terms of sellers wanting to find out the value of their home, but not enough for me to be confident that we're going to see a big uptick in the number of new listings coming up in San Jose. All right, now let's go ahead and talk about homes sold numbers. This represents a decrease from the same time last year. We have a 34.1% drop. In February of 2023, we had 303 homes sold in February for San Jose. Last year, 460 homes. In terms of trying to discern the trend here, we can see we peaked in April of 2022 last year. The trend from December to January was a decrease last year from 606 to 429. Again, we see a decrease that feels on par in terms of month-to-month relationships with one another in December of 2022 to 2023 January from 372 down to 217. And then we saw an increase from January of 2022 to February of 2022, and we definitely saw that happen here. So in terms of each month's relationship to the month before it, we're consistent. But take a look at March of 2022. Huge jump between February and March, which kind of supports what I was talking about before as it relates to new listings. So it's not going to surprise me if we see a big jump in March, but we're not, in terms of its relationship to the previous month. I mean, look at how much of a jump that was from February to March last year. I think we will see that increase, but we will not see as dramatic of an increase. And I think we'll also see a similar disappointment in April in terms of new homes coming on the market. I'm still not sensing a lot of confidence. I'm still not sensing a lot of enthusiasm on the part of sellers to jump in. And in terms of homes sold and also homes pending, it's just not there. It doesn't seem to be happening. So keep that in mind as we move forward. Next, let me know what you guys think of this slide. I'm trying to integrate pending sales with homes sold. I can completely replace the homes sold with really just the graph on the bottom here. But as you can see, this chart is showing us in blue the number of homes that sold in a given month, and the green line is showing us the pending. And what I'm trying to do is help you visualize the relationship between homes that sell this month versus what homes that go pending this month. And pending means an offer was accepted, right? So as this process works out, you put your home on the MLS. When a buyer comes along that wants to buy your home and makes an offer that you accept as a seller, the status of your home is changed to pending or contingent, depending on the offer, right? If there are contingencies, it goes contingent. And if it goes to pending, that means contingencies have been removed typically. It doesn't always work that way, depending on the real estate agent, but that's normally the way it's supposed to work. So this reflects a green line that is telling us the future of homes sold, right? If you see a pending jump in February, then you should expect to see a sold jump in March, right? That makes sense because it takes about 30 days for a home to close escrow. It can actually take 30 to 45. So if you accepted an offer at the very end of February, you might not see that show up as a closed home sold until April. But that's what we're trying to figure out here. So I'm giving you the typical display that we've always seen. This is the same numbers we've seen before, where the total number of homes sold down 37.3%. Or excuse me, the total number of pending homes down 37.3%. And if we think about it in context of inventory overall, and I should have mentioned this in the home sold slide, but in San Jose, we added 175 homes to the overall market inventory, meaning we sold fewer homes than we listed in the month of February. So we net added more homes to the inventory. So that's just adding more homes to the inventory that we then carry forward. As soon as we start getting to the point where we're selling more homes than we're listing and draining the existing inventory month to month, that's kind of a turnaround point that we'll be looking for. But it's been a while since we've seen those kinds of numbers come around. So what we can look at here is see that in March of 2022, we had a big high point in terms of total number of homes sold. And then if we look at homes sold here on the blue, we can see that in April, we had that peak, right? We had that peak of total number of homes sold. But what's interesting is take a look at this number and then take a look at this number. We've got pending and then we've got sold. Now, one reason why I like to point out the discrepancy there is there's two possibilities on why the actual sold number is less than the pending number. One is a longer escrow, which also kind of tells us a story, but also the potential that more escrows failed, more escrows fell out of escrow and ended up going back on the market as an active listing. So whenever you see that, like for instance, from April to May, it looks like we were very much on par. We had a certain number that went pending and a certain number that sold, and it seemed fairly equal. So it seems less likely that we had this drop in sold in April that was really just because so many properties sold at the end of March that would then drag on over to May because the number between April and May is so much on par. We would expect this number in May to be higher if there were holdover escrows that simply lasted longer, which would explain why this number was lower, right? And I'm concerned I'm making this more complicated than I am making it understandable. I'm hoping that we're able to use this as a way to tell the future by a month. And I may be making it more complicated. So I'd love to hear your feedback. Feel free to comment below. Let me know what you think of this particular slide, because I think this is interesting information that we should run with, but I also want to make it as easy to comprehend as possible. Okay. Next, let's go ahead and jump into the average original list price. Now, original list price is something that we've been talking about here on my market analysis for a while. It is an opportunity for us to try to take a peek inside the mindset of sellers, because this is what they listed their home for at the very beginning. When they sat in their living room and they were talking to the listing agent, they all agreed this was what we should market the home for, with the goal being that we're selecting a number that it will actually sell for in the shortest period of time. And that's where we're at. Comparing it to the same time last year, sellers in San Jose, on average, expected to make 6.3% more than those who listed their home a year earlier. We'll see in a minute how that doesn't really pan out, but that's where expectations are. And that's really what we're pinning down here. And understanding the expectations of sellers is a valuable thing when it comes to you actively participating in a market as a buyer, so that you can kind of get into the mindset of the seller to understand where they're at, because this will soften at certain points during the sales process of a home. And as soon as sellers tend to get around 30 days into their home being on the market, you start to see a greater willingness on their part to reduce their price or accept a lower offer. Okay, what can we tell in terms of trends, future things, all that kind of wonderful stuff? Well, back in August of 22, we saw a peak. That is not a real peak. We basically had some homes that were accidentally listed with an extra zero. So that's why that number is so high. If you were to normalize it, it would really be fairly level with July of 22 and September of 22. So relatively flat all through there, with some general downward trends after that up till February of 23, with that interesting uptick in February of 2023. If we take a look at average sales prices, so now let's think about comparing that increased number, right? So remember, San Jose, 6.3% list price increase from the same time last year, but on average, sales prices were 17.7% lower than the same time last year. Last year, 1,458,030. This year, 1,199,517 was the average sales price. And just to calibrate you, this is single family residential, townhome, and condo all blended together to come up with this number. You can see a trend here that is far easier to spot than in the expectations number, with a steady decline since April of 2022. This is going to feed a number we're going to look at in a minute. As you come onto the market, pricing it higher than the market will support, we're going to end up eventually with more homes being reduced in price. And that's a shame, because that's a waste of time for sellers. And the longer you wait, the more money you are losing in the process of trying to market your home. Next, let's go ahead and do percent of list price. Now, just like we were looking into the minds of sellers a few slides ago, this is to look into the minds of buyers, because what we see here is what buyers were willing to offer at the time they bought the home. So the price that this is referring to is whatever that list price was at the time they bought it. So, or the time the offer was accepted. So this doesn't represent necessarily that original list price, because if the price was raised or lowered after that, it represents that price of what it was when the buyer was there and making an offer. So what we're seeing now is an interesting change for San Jose. As you can see, we've been below 100% now for a while, with one little uptick in September, but really since August, things have been below 100% in San Jose. This month, 101%, February of 2023, compared to last year's 114.8%, which meant that the average home in San Jose was selling for 14.8% above asking price. And with all the things that implies, right? Multiple offers, tons of buyers. It represented a feeding frenzy on the part of buyers in February. And remember, this is the month before interest rates went nuts. So as we look into March numbers next time, I think we'll start to see things start to change. But also remember, as folks locked in their interest rates in March, we might see those sales change lag a little bit by a month, right? Because you can usually lock in your interest rate for a month or more if you're willing to pay some sort of a fee to lock those rates in for a longer period of time. This represented an overall change of 13.8% from what sellers were getting last year. And that obviously is a substantial change. And what we need to do is to see homes that are listed at a price that is more calibrated to the realities of San Jose right now, which in a lot of cases we're not, as you can see from this difference between what homes are selling for versus what they're being listed for. Total days on market, again, not hard to spot the trend here. We have a 191% increase in the total days on market compared to the same time last year. In February of 2023, that was 32 days. And in February of 2022, it was 11 days, which again, totally artificial number. If realtors were simply listing the home and taking the very first offer that came along, it probably would be 1, 2, 3, 5 days tops. But back when this market was as crazy as it was, realtors were putting homes on the market and saying, we will not consider any offers until such and such a date at such and such a time. And really that number 11 simply means on average, realtors were making people wait 11 days before they could make their offers on the homes. Totally a normal number. That's about right. I would usually do 10 days so that I could have 2 weekends for buyers to potentially visit the property. Obviously, now that we're above 30 days, that is not a number that's being managed by realtors. That is a real market number. It's taking 32 days. What's interesting is we've actually seen it drop a little bit, and I think that's fairly normal when we consider the time of year. If we look at last year, you can see between January and February, we did see a drop from 15 days to 11 days. The market tends to pick up in February, March, and April. The numbers are clearly represent that in terms of days on market. The one wrinkle in this year's numbers is going to be that March again was that month when interest rates went up, and we start to see the days on market increase. So it didn't take effect really till May when things started to go up and to start to move into 13 days in June. Again, I think a lot of that has to do with how many people locked in rates at a slightly lower rate in March. And then we started to see that escalation in interest rates from March on. And then really once you hit July, it was in full swing. High interest rates were crazy. And we started to see a steady increase all the way up until we were above 25 days for the average. And we're now kind of hovering right around 30 days. Price reductions. And this is the one that I think is a good one to look at. Now, I was doing a city-to-city evaluation of this more deeply. I've decided to hold back on that. I don't think there's enough of a sample size for most cities to do a in-depth jump into this. It might be true for San Jose, so maybe we'll do these for San Jose. Not going to do them for Morgan Hill and Gilroy just because the sample size is so small. But for right now, let's just look at the big picture. This is really good news. The fact that we're seeing these numbers where they are is actually a good thing because it's pretty much the lowest in the county for the areas that we check. What this number tells us is how many homes on the market had to reduce their price. And this month it was 20.3 for February of 2023. For January, it was 26.8. So a nice dip. But given the amount of inventory growth we saw, given the disconnect between what homes were listed at, because remember, homes were listed at, what is it? Original list price was still 6.3% higher than the same time last year, while still having a 17.7% drop in average sales price. That difference is accounted for by this number. So we are going to have to see more folks coming onto the market listing with correct prices in order for this number to stay low. But given what we saw for February, and as we start to see homes staying on the market longer, it wouldn't surprise me if this number jumps back up because we're still seeing too many homes coming on the market that are at prices the market won't support. We may see things strengthen again if interest rates go down or something nudges things more towards a buyer advantage, but we're not seeing that yet. So if assuming those other things don't change, this number is going to have to go up in order for sellers to get their homes sold. Okay. That's about it, folks. I hope this has been good information for you. If you'd like to find out more or get access to the tools that I provide for my buyers to start their search or for potential sellers to find out the market value of their home, and I've got two options for you at my website at soldbyrobert.com. You can either get an automated estimation of your value, no obligation. It's instant. You just enter your address and it'll give you a rundown based on market data through an algorithm. Not as accurate as it could be, but it's better than nothing if you're trying to get a broad ballpark. And if you prefer a more accurate estimation of your home's value in today's market, you can also ask for a competitive market analysis through my site, which actually has me go in and do some competitive market analysis and do some work to majorly focus just on actual comparable properties instead of letting some automated algorithm do it, which is usually quite a bit more accurate and more reliable. So feel free to go check that out. I have other tools there too. You can check out the podcast. You can check out the upcoming Coffee and Real Estate that's going to be happening for April. And I look forward to seeing some of you there. It's a live chat, so feel free to bring your questions and comments. All right, folks, the goal as always is to leave you with more knowledge on the table than I take up in your time. Hope we've accomplished that this time around. Thanks again for listening, and I'll talk to y'all next time.